Silicon Valley Bank is a commercial bank headquartered in Santa Clara, California, USA. It was founded in 1983 and has since become known for its focus on technology and innovation, providing banking services and financing solutions to startups, venture capital firms, and other technology-focused companies. SVB offers a range of services including commercial banking, investment banking, and asset management. It has a strong presence in the U.S., with offices in major technology hubs such as San Francisco, New York, Boston, and Austin, as well as international offices in the UK, China, and Israel. Silicon Valley Bank was a state-chartered commercial bank headquartered in Santa Clara, California. SVB was the 16th largest bank in the United States at the time of its failure on March 10, 2023, and was the largest bank by deposits in Silicon Valley. How does a bank collapse in 48 hours and why did it fail? The longer version is a bit more complicated. Several forces collided to take down the banker. First, there was the Federal Reserve, which began raising interest rates a year ago to tame inflation. The Fed moved aggressively, and higher borrowing costs sapped the momentum of tech stocks that had benefited SVB. Higher interest rates also eroded the value of long-term bonds that SVB and other banks gobbled up during the era of ultra-low, near-zero interest rates. SVB's $21 billion bond portfolio was yielding an average of 1.79%. The current 10-year Treasury yield is about 3.9%. At the same time, venture capital began drying up, forcing startups to draw down funds held by SVB. So the bank was sitting on a mountain of unrealized losses in bonds just as the pace of customer withdrawals was escalating. On Wednesday, SVB announced it had sold a bunch of securities at a loss, and that it would also sell $2.25 billion in new shares to shore up its balance sheet. That triggered a panic among key venture capital firms, who reportedly advised companies to withdraw their money from the bank. The bank's stock began plummeting Thursday morning, and by the afternoon it was dragging other bank shares down with it as investors began to fear a repeat of the 2007-2008 financial crisis. By Friday morning, trading in SVB shares was halted and it had abandoned efforts to quickly raise capital or find a buyer. Despite initial panic on Wall Street, analysts said SVB's collapse is unlikely to set off the kind of domino effect that gripped the banking industry during the financial crisis. The bank was caught by higher interest rates. Flush with cash from high-flying startups, Silicon Valley Bank bought huge amounts of bonds more than a year ago. Like other banks, Silicon Valley Bank kept a small amount of the deposits on hand and invested the rest with the hope of earning a return. Silicon Valley Bank's failure is raising concerns about other banks. Silicon Valley Bank is small by comparison with the nation's largest banks. Its $209 billion in assets pales next to the more than $3 trillion at J.P. Morgan Chase. But bank runs can happen when customers or investors panic and start pulling their deposits. Shares of both First Republic Bank, which is based in San Francisco, and Signature Bank in New York were down more than 20% on Friday. Young companies scramble to get their money out of the bank. As the startup ecosystem tries to make sense of Silicon Valley Bank's implosion, some entrepreneurs whose funds are frozen at the bank are turning to loans to make payroll. Silicon Valley Bank provided banking services to nearly half of venture capital-backed technology and life science companies, according to its website, and over 2,500 venture capital firms, including Lightspeed, Bain Capital and Insight Partners. What's next? So, while a broader contagion is unlikely, smaller banks that are disproportionately tied to cash-strapped industries like tech and crypto may be in for a rough ride. The FDIC typically sells a failed bank's assets to other banks, using the proceeds to repay depositors whose funds weren't insured. Thanks for watching. Please like and subscribe to the channel.